The new shares, with a nominal value of 50 kobo each, will be issued at 15 naira per share. The offer is structured on the basis of one new ordinary share for every 13 ordinary shares held by shareholders as of the close of business on Wednesday, July 16, 2025, which has been confirmed as the qualification date. This capital raise aligns with UBA's growth strategy following the bank's strong financial performance in 2024. The bank reported a profit before tax of 873 billion naira for the financial year, driven by core earnings and enhanced operational efficiency. Aliko Dangote, president of the Dangote Group, has stated that Nigeria should target a power generation capacity of between 50,000 and 60,000 megawatts. He disclosed that his group currently generates over 1,500 megawatts of electricity for internal use across its facilities. He made the remarks during a tour of the Dangote refinery in Lagos, highlighting the visibility of large-scale industrial projects within Nigeria. He emphasized that boosting Nigeria electricity generation to 30,000 megawatts or more is achievable and less complex than constructing the refinery. Dangote advocated for deeper private sector involvement in the power sector, noting that the industry has been privatized. He urged Nigerian investors to channel their funds into domestic economy rather than invest abroad, citing capital flight as a significant barrier to national development. The industrialist reiterated that domestic capital investment is vital for building investor confidence and unlocking the country's growth potential. He indicated that the Dangote Group plans to expand fertilizer production capacity to 12 million tons in the next 40 months, positioning the company as the largest fertilizer producer globally. Economic experts have expressed concern over Nigeria's increasing dependence on China for imports, warning that disruption in Chinese supply chains could trigger inflation and broader economic instability. The warning was issued during the Cowrie Quarterly Economic Discourse hosted by Cowrie Asset Management. According to the Foreign Trade in Goods statistics for Q1 2025 released by National Bureau of Statistics, China remains Nigeria's top import source, followed by India, the United States, the Netherlands, and the UAE. Major imported items included gas oil, petroleum oils, crude cane chain for refining, and drum wheat. Nigeria's crude oil production is projected to increase to 1.6 million barrels per day. The GDP growth rate is forecast at 3.7% for 2025, while inflation is expected to moderate between 20 to 22%, assuming exchange rate stability and improved food production. However, revenue from the oil sector remains suboptimal. In 2024, actual federal revenue fell short of projections, with only about 10 trillion naira realized against a target of nearly 20 trillion naira. Analysts flagged a rising debt service to revenue ratio, reaching over 100% in some quarters. Nigeria's inflation rate drops to 22.22% in June 2025, lowest in the year. Nigeria's headline inflation rate declined to 22.22% in June 2025, according to the latest Consumer Price Index report released by the National Bureau of Statistics. Year on year, the inflation rate declined significantly by 11.97 percentage points from the 34.19% recorded in June 2024. The National Bureau of Statistics indicated that the fall is largely attributed to the rebasing of the inflation index to 2024 base year. Analysts at Afrinvest had projected the inflation rate to be 22.2% year-on-year and 1.7% month-on-month for June, citing the Eid-Kabir holiday and Central Bank of Nigeria's forecast. Despite the disinflation trend, monetary policy is expected to remain tight, with the central bank keeping rates to external risk and concerns about food supply disruptions and delayed GDP reporting. Faith Ojo, BTV News.